All right, so Emma, one of the things that you're watching when it comes to the U.S. markets and really the global markets are trade deals. We got some news this morning, possible UK-U.S. trade deal on the way, and then U.S. and China officially starting some talks. Does that change your view when you're looking at the U.S. markets?
I have to say I'm more aligned with the European market view than with the S&P futures on this. I don't want to pour cold water on the optimism, but these are very, very early days for trade talks. And although it's a positive step that the US and China are going to Switzerland to meet, actually already pricing in that optimism in the markets we think is too soon. We remain quite cautious about the outlook from here. You know, as you mentioned, we've also got rumoured reports that the UK is heading to Washington this week in order to continue trade talks in a bid to do a deal between the US and the UK. We've also had news out this morning that the UK has secured a deal with India, a trade deal on both goods and services, things like on whiskey, on autos. UK puts a lot into India in those two markets, and services as well in terms of professional services. So although there are some green shoots coming out of this, global tariff war, we remain very cautious because we continue to see expectations of greater volatility for the duration of the year. It's very early days.
All right, Emma, in all fairness, optimistic tone. We're looking at futures right now, but in general, people are being a bit cautious when it comes to the markets. In fact, we have our Fed survey. 53% of respondents believe that we're on the way towards a recession. Of course, we have the Fed meeting coming up later today and the decision and the Jay Powell news conference. How are you expecting that to play out? 95% chance of a pause, according to the CME Fed Watch tool. But I'm talking about that commentary from Jay Powell. Are you expecting dovish, hawkish? And what do you see the market reaction being?
I have to agree with consensus on the move, but I also agree with you. Actually, it's all eyes on the press conference afterwards. I think actually the tone will be one that's very negative and cautious. Optimism is hard to find in markets at the moment. We're seeing some when it comes to micro. You've got some great tech earnings last week, but actually the overarching view, and from our clients as well, is that they expect some negativity to continue in the market. And actually the economic outlook on both sides of the pond is negative as well. So we surveyed our clients a couple of weeks ago. We do it on a monthly basis on what their expectation is for both the global economy and for global markets. And we saw one of the biggest month-on-month drops we've ever reported, 30-point drop in investor confidence in the US market. And a lot of this is due to the tariffs and due to actually the expectation that if not a recession, but considerably slower growth is coming out of the US economy over the coming months, but coupled with higher inflation. So you don't necessarily get the benefits of lower rates that you may do going into a normal recession where you also see inflation lower. We think a pause for now, and we think a signal actually that the bank says we don't expect cuts to come just because you have slower growth out of the US economy, just because the US consumer is not looking as hardy and robust as they were in previous years, actually does not necessarily mean you see cuts, which doesn't necessarily mean that you get a boost to the market. So we actually think there will be a negative impact on the stock market towards the end of the week once Jay Powell has spoken.